Welcome to UBP TV. Tapering or not tapering? The next Fed FOMC meetings will be particularly important for financial markets, when the Fed will decide to reduce its monthly purchases of treasuries and mortgage bonds. Just remind, the Fed is purchasing every month $45 billion of treasuries and $40 billion of mortgage-backed securities. This has led to an increase in the Fed balance sheet from less than $1 trillion in 2008 to $4 trillion in last November. This balance sheet represents now around 20% of the US GDP. What are the effects of these purchases, or also called quantitative easing? The Fed has lowered long-term interest rates and probably maintained these rates to low level for a longer period of time, as normally seen during a recovery process. The Fed has reduced the cost of refinancing for the government and also reduced the cost of capital for the corporate sector. So when the Fed will start its tapering, this would probably mean a challenge for monetary regime for the financial markets and more specifically for the US bonds, meaning also potential upward trend for the US dollar. What are the arguments in favor of starting the tapering now? First, a stronger than expected growth. GDP in the third quarter is now close to the range expected by the Fed, that is to say 3.5%. Secondly, a more sustained job growth. A trend of more than 200,000 job creations per month is the minimum required to see lower unemployment rate. Thirdly, the unemployment rate has declined in the past month. And finally, the rise in asset prices could be also an argument indicating that all the large liquidities injected in the economy are invested in financial assets and should transfer to real growth in the next month. All these arguments pave the way for a first Fed decision in December, but we also must examine the arguments in favor of a delayed action. First, the unemployment rate is still too high and the participation ratio is close to its historical lows. Secondly, the core inflation has declined and is now close to the minimum generally accepted by the Fed. Thirdly, the Beige Book, recently published, describes a still modest and moderate growth in the US. And finally, negotiation about the US fiscal situation and the necessary increase of the debt ceiling should take place in January and February next year. So in our scenario, we think the Fed should wait until the beginning of next year to start its tapering. The best timing is to do in March, which will be the first FOMC meeting to be chaired by Mrs. Yellen. We do recognize that there is a high probability to begin in January if the economy strengthens and if there is some political agreement on fiscal and debt situation. The Fed is very pragmatic and remains heavily data dependent. This is the reason why we also expect a soft start of the tapering, just reducing by modest amounts its monthly purchases. The Fed wants to avoid any double or triple dip on the activity, which should come from a too strong rise of treasury yields and a stop to the credit and housing recovery. Given the importance of the reaction in the financial markets, central banks are also obliged to manage carefully expectations. Finally, it will be a good news for the US economy and the markets when the Fed will begin its tapering, because this means that the US growth has become more sustainable. Thank you and see you soon on UBP TV.